You're back.
No, you've never met the person standing before you.
What?
Jason is not back. I, a new man, am arriving here for the first time.
Cool. So, how was Burning Man?
How was Burning Man?
What's wrong?
Good morning, traders. Captain Jim James here with your daily brief. I know that you all been patiently waiting for one of these. I've been gone west on a trip that I took for Labor Day the week, and I just got back without having slept for many hours. I actually nodded off, I don't know, maybe 6 a.m. or so, and my brain woke me up at like 8. So I quickly opened my eyes, and then I did a quick chart for SPY so that I could try to do some day trading yesterday, and just said hi on Twitter. And most of you folks said hi back, which was really cool. Yeah, but I hadn't really had a chance to do any research or anything while I was gone. But I did, my last video that I made for you all, I said a few things to you. First, I talked about closing all of your longs, which you should have been able to do. That would have been two weeks to 1 week ago. Play the market that's in front of you, but to also expect, for us seasonally to start to head down. We also talked about IWM heading down first, and then for the SPY and Nasdaq to follow, and to actually find some support in IWM or the rut sooner than you would in NQ and SPY, right? ES over time. And those things seem like they're still playing out. It's kind of ironic because I was looking for, I think, 453, and I got it right before I left, and then it was at 453 or around there, I think, on Friday. So nothing really changed. It was more about rotation, trying to find a way to start to get short in this market and to rotate into stocks that we've already talked about ad nauseum about going up, even though the market's starting to slightly roll over, or at least seasonally roll over. So you had Tesla outperform yesterday. You had Apple outperform yesterday. I think 2 weeks ago I told you this would happen. And that's what you really want to be focused on. We're going to take a look here in a minute at the ES chart. And, it's really easy for, let's say, a bull in springtime to say the market's going up. That's not really rocket science. And it really isn't rocket science for a bear to say, hey, look, I told you the market's going down in September or October. What you really need to understand about seasonal changes is the nuances in them. So when you see, let's say, had you shorted Apple Friday into Tuesday, you'd be toast, right? And we already talked about that some of these stocks are going to continue to go up, even though seasonally will start to go down. We talked about Teslas too. And those are two specific ones that we nailed on the head. And I'm sure that these fucking bears probably thought they were going down. So you really want to pay attention to individual stocks from now into December that will continue to go up even if the market trends downward, right? And you can still play those. Another good one would have been Airbnb. Performed stellar yesterday. And we talked about how, when I talked about where the bull trap was, I said it was much higher. And it is much higher. It has become much higher. You can see Apple showed much higher. You can see Tesla did. And actually a bunch of the FANGmans were popping off yesterday as well. And they were trying to grab, of course, liquidity for the market to go down, but also to close out positions that these banks and funds and institutions are in at profit. And which is what they're beginning to do. Even when the market is going to seasonally go down, they've made the money they need to make. The dent into those stocks won't be as bad, and they will actually some of them will actually tend to continue to go up as we move forward into winter. Now, one other thing to think about is the bearish stance right now, and the Armageddon stance, and the markets, going to crash once more. I have, in the past, drank that Kool-Aid. And I can promise you can lose lots of money falling into that thought process. The only time in my career trading that I've been successful was having a bullish outlook most of the time. Even if we go down quarter after quarter, let's say, or over the course of a year, there are many opportunities as a bull to play the bull side. You know, and actually yesterday on Monday, I was looking at the premium on puts, and outside of playing spreads of some kind or some sort of theta play, there really wasn't a lot of, there's not really a lot of money in it. 300, you know, to make 300% on a position that you have to hold for 3, 4, 5 days, I'm not really interested unless it's a protected spread. I'm not interested in just holding puts for a week or a month, anything like that for the premium that you have to pay. And if anything, I can make more money on the bull side of these plays as there's no premium every time that we bounce back, just day trading. But that doesn't mean that I don't buy put spreads. I do buy them. I bought some yesterday in that middle of the day kind. There was a moment in the middle of the day yesterday where there was some shifting in sentiment. So I was actually able to grab to, well, I guess you'd call it selling a rip. Sorry, I'm drinking my coffee here. I just woke up. Actually, was gonna buy some calls yesterday into close, and fell asleep and slept all through the night as it just hit me like a brick wall. Coming back, my throat's a little dry as well, as you can probably tell. There was smoke and dust everywhere. So just getting back to what you need to be thinking about right now is you're going to have news events. They're going to be, your economic calendar news events are going to trigger downward pressure. It's not going to go straight down no matter what anybody tells you. I am not sold, and there are no indicators that say that we are going down into a recession or market crash or anything like that. And I wouldn't play that perspective unless we were to prove that either. And that would take a substantial downturn over a long period of time. You're talking about sometime into next year for me to get that bearish. Keep that in mind as we move forward from now into winter so that you can stay nimble, get bullish when you need to get bullish, and not drink that bear Kool-Aid. It is the surefire way for you to blow your account to become bearish. And if you have to, you ignore these people. The snark and all of these I told you so's, they really aren't. I'm going to show you why here in just a second, because we've already talked about this as bulls. We've been discussing this for weeks ad nauseum. So none of us should have gotten caught in this downward movement that we took on Tuesday. So today we do have the beige book. We've got job openings at 10, beige book at 2, consumer credit at 3. I think we have some Fed chairman sitting on a bridge like trolls today at some point later in the day. And then Thursday we've got initial jobless claims, then continuing claims. Those are important for some downward moves. I do think today we might recover slightly today. So we'll take a look at that as well for where the economic calendar is. And Friday we've got PPI, we've got wholesale inventories, the revision. I will start to pay slightly less attention to the economic calendar as we move forward and rely mostly on my charts for where we are, when we're going up, when we're going down. Most of the news right now will be used as catalysts to drop the market or raise the market, and you're more or less going to need to start comparing the economic news that you are going to see. You're also going to compare the bullshit news that is dropped into the market for you to consume. And always check that against where we are in the chart. I posted yesterday about Coinbase, the stock going down yesterday. And we've been playing coin, which is funny because I heard that I think I read that the website was down or something. And it's funny because it was right at where resistance is, right where you should be selling. The manipulation in the market it never ceases to amaze me. It's mostly why I tend not to listen to market news too closely or too in depth. I use it as an indicator that yes, it was time to sell. I'll also, but I do pay attention to it when it's something that's unknown for its immediate effect on the market. Those are the things where there's usually lots of opportunity to make money, where it's something where we didn't know, no one else knew. This wasn't something planned behind the scenes. So we're going to take a look real quick at ES. We're just going to talk about seasonally, right? We've already talked about seasonally that the market should start to pull back. When we talk about this seasonality and you hear a bear that talks like they found the Holy Grail or something, In reality, they didn't. You can see here, this is September 3rd of 2020, and we made our way down. You'll probably see bears post some kind of a chart with this, downward move into the 11th or 15th, and then a spike up, and then another spike down. They will literally steal these charts from just last year and say, expect this here. They won't tell you about this here in October, how we come back. I mean, this right here is a huge move in October of 2020. And then we come back down into to sell off once more in late October. And you'll see that into December, we have a nice holiday rally in here. So this is seasonally what happens in September and October. None of this is rocket science. It happens every year. Well, not every year, but most years. We can look at in 2019, we have the same thing. We have this move up here in early September, and then we have a move down from middle of September, I believe. Yeah, the 12th. It starts to roll over down into the first week of October. But we do make this big, huge move up here into January. And the 2019, 2020 is usually how it goes this time of year. You have seasonally downtime in September, October, and then November, parts of October and parts of November can be a toss-up. It can actually get very bullish in here, or it can get bearish once more. This is where things will get tricky for us this year, is mostly October and November. Do we get a later holiday rally, or do we just rally straight through October? And you can see here, this is October 7th. And if you go back even into, we can look back into 2018 here, and you'll see this is, we continue to rally up into September, into October 1st, and then we had a huge sell-off into December, right? We got no holiday rally here. So you can see that no one's really going to predict what's going to happen coming into the fall and winter, though there are expectations from your previous year that will follow that same trend. And this is what leads me to let you know that you have to be nimble in how you're trading. When you look at 2018, 2019, and 2020, all 3 years were different and gave you 3 basic setups for the fall and winter. So any bear that's telling you how this is going to play out, they don't know what they're talking about. Any bull that tells you how it's going to play out, they don't know what they're talking about. You can say, though, that seasonally we are going to start to go down, right? That typically we tend to sell off in September, October at least. Parts of October and November are a toss-up, so we were anticipating this selling down. The question is, how much do we sell down? How far do we sell down? And do we recover? And how much do we recover, right? Does that take place all through winter? And then we will also want to talk about individual stocks. How far up do they go? How long do they go up? The thing you want to consider about individual stocks as we move forward through the fall and winter is you want to be looking for stocks that have been beaten down since February, sometime in February. If you find that your stock was beaten down all year long, there is a fair chance that it is going to go up. Even if it has minor pullbacks from now until December, you will find that those individual stocks will go up through December. That happens every single year. Pay attention to those. I think I've shown you on FinViz in past videos how to search stocks that are below their 200 MA, that have hit their 200s. If you see stocks that have hit their 200s, right, their 200 AMAs, or just recovering from their 200 AMAs, maybe they've been up the past few weeks or the past few months, you'll see those continue to go up. That's why we were able to predict Tesla going up. That's why we're able to predict that Apple would continue to go up. These aren't any insights that I make from anything other than looking at their charts, right? We called the same thing on Airbnb and many other stocks, where we've said, hey, look, this stock has gone down all year long for an entire year. When you see a stock go down for a year, you want to start to see if there's any life in it, right? If a stock goes down longer than a year, typically there's something wrong with the company. They're not in favor anymore. They haven't introduced any kind of new technology or services. that we're unaware of. So anyways, so we already looked back here on ES. We know that seasonally we tend to go down from this period into October. We know that it's a little bit more of a toss-up in October through November and December. And we also know that we sometimes don't get a holiday rally, depending upon how strong September and October is. So if we do start to sell down from now into October, we know that we can start to get nice and long comfortably, typically in November. And we're going to get a little bit closer here on ES now and start to take a look at where we think it's going to go. So I tried to delete a few minutes ago. We're going to get rid of this VWAP here because we really don't need to see that. And this is perfect right here. This is really what you want to see. I really don't care what futures are. I think this is, it's 401. I really have no concerns where futures are. You really want to see, I think this is where I left, somewhere in here. I think it was the 30th. It was like a week ago. But what you really want to be looking for is, which people are starting to call this Megaphone Pattern, this expanding wedge, it's also known as. And you want to start tagging these things down here, right? You want to start taking a look at where these start or begin to form. And we're going to take this auto off here. We'll expand this. Right? You really want to start playing these things out. And we're going to go a little bit farther back. We're going to go back to the 1 year real quick. And we're going to auto this. We've drawn these lines I don't know how many times. I think we've drawn them multiple times. And I think it's fine that we continue to draw them. Let's do this one down here. Let's bring this a little farther back. What we'll do, get this somewhere right down in here, right? It's a little bit closer so that we can do this work. And you should be able to start doing some of this work yourself over time as well, so that you really don't, this is how you become free of listening to the noise on social media. This is where you stop listening to people and you start making your own trading decisions. And we can put one more down here in case the doom and gloomers want to get crazy. Put that one right there. And you can see this here. You can see that whenever we touch down here, you can actually see even some support up here. We could put one more above, but it's not really relevant to what we're doing right now. You just want to know where levels that we find support, so that we always know when to be buying dips, right? We always want to know where the real bottom is. It's probably down here somewhere. And we're going to bring it back down to this closer level. And you can start to see where support levels are, right? You can start to see where this is coming. You could even extend this if you wanted to, but I don't actually see this happening. I'm not gonna tell you that that's going to happen. I doubt that it happens, that we get below this level here, and it goes up every day. I'm assuming at some point this week it'll be 4,400, 44.47. And there's some other levels, some hard supports you can put in here now that you have this, right? You have these major supports drawn in. You can start to look for some other areas of support below. You can see that we sold down. There was hard support here. You can also look farther back even and add some of these major supports in. probably going to be somewhere in here. There'll be one. There'll be one somewhere in here. Here's the doom and gloom for bears, right? You've got some bears that are set calling for 4, somewhere even farther down here, right? I'm sure there are some bears out there, some real Kool-Aid drinkers that are talking about 413. It's probably higher. It's probably like 416. You could possibly put one more even lower, make it just a zone, right? Where to zone or dip by. And you can start to get an idea of where we're headed here, right? Start to see where you're looking for. You'd be surprised when you see this line that I have here, this upper resistance. You would be shocked if we broke free and actually made a huge move up this way. You could draw another one if you wanted to, and you could do this, especially if you're a bear. You can draw one of these, something a bit more, if you're really bearish heading into October, let's say. And this is October 1st here. You could see this, maybe we take this second run down to this 43.76 in October. This wouldn't surprise me to see something like this take place. Let's see. Something like this, right? A recovery up, recovery down. We make this move down into middle of October. None of that surprises me. That's a nasty looking line. I could probably go something more like this. But, something in this vicinity makes more sense, right? If you were to drop through here today, if you were to drop through here and then come up, right? Kind of that same pattern you're looking for. Let's see if we can change that color. So you can see two different options for how we come down. You can see that whenever you want to sell these rips, it's up above here. You can use this line here or even this line above to sell your rips. And you can also start to use some support lines for where you're buying support levels. So you're going to look for somewhere in here. This is kind of neat how this works itself out. And you can see this nice bearish triangle forming over here for an October dump. So we'll come down on a smaller, I'm going to delete these right here, but you can see those for the SPY. And you're probably wondering, how do I play today, right? You really want to know, how do I play today? So we're going to get it closer. And we start to make some sense here, right? We're just going to start looking for support and resistance somewhere in there. And I'll play this chart today. I'll end up playing this chart on SPY. I'll transfer this information over to the SPY so that I can have a more, let's see if I can get rid of that. I end up transferring information like this over onto SPY. I think I already have it done, so that I can start to make my moves for the day, right? So if I'm going to day trade today, I'm going to look for some firm support here at 44.98.50. If we break through, there should be minor support at 44.63. And then hard support, we can change the color of this, because I think that this is hard support, somewhere down here at 44.25. I'll buy this dip all day long. And to be honest, I would like to see this move down sooner than later. But if we don't get this move down, you're going to see us make this move up here, right? Or even more, for more of a liquidity grab up here. So again, we've got 45.98. We've got 45.56, 45.40, 7.5, 45.24, 45.02. This is as deep as I see us going today. We might play in this range and look for a liquidity grab above. And then for the rest of the week heading into Thursday and Friday, look for 44.63 or even 44.21. Anytime I can play the bull side in here, I will. And then we're going to move on to which we look at next. Let's look at NQ, which is NDX, Nasdaq, the Qs. We'll do auto on this one. And we're looking for that same kind of a pattern, right? How do we chart out NQ? And we already kind of know how to do this. We've done this many times now. We know that NQ can fall much farther because of the numbers, right? Let's see if we can make this white. See another one right here. And we can do another one down below. Right here. And then we know that we can put some buy zones in, right? Probably have one hiding out up here somewhere. We know we have to count the bears in, don't we? Right in here somewhere. We have some firm support down at 13,949. We've got 14,530, 14,830 down here below. And if we're going to play NQ or Nasdaq, we know we have some buy the dip opportunities here at 15,580. We know that we have a giant gap here that needs to be filled, right? At least down to this level here. This is probably going to be the price target. Somewhere in here between now, I think this is showing October 7th. But I would expect that we come down much sooner. My price target from now until September 15th is going to be 15,298, somewhere in here. We could possibly go a little bit deeper down into this area. This is where you're going to find hard support until we get into October, somewhere in this vicinity right here. You're going to be looking for us for some firm support in here, possibly for another move up into October, and then a deeper move down into, it's either going to be in October or we'll see that move extend into December down to 15 or 14,530. So we'll play this as we see it as we move forward. You can also look from a bullish perspective of a range expansion in here, right? We bounce around in here until it starts to break through. You'll start to see how NQ unfolds over time as well, right? Now you will find some form of support down here. Let's see if we can firm this up a little bit. Now until we come down or drop down below on Nasdaq, it's going to be challenging to find out where this expanding wedge actually is. You'll find some support probably on this line down here, somewhere down here or somewhere down here, and then we can firm this line up to where actual support is and how to play within this range right now. This is rolling over right now. There are large banks and institutions that are trying to unwind themselves from their long positions. I do expect NQ to hold up slightly longer than IWM. I even suspect that SPY doesn't fall off as soon. NQ is probably going to take the longest to unwind, and we can go even deeper in here and give you some, got this nice gap here that needs filled. And then we've got one more above here. So my expected range for today is going to be 15,701 at the top as the top. Possible that we go as high as 15,744. The low for today should be 15,505.50. Any break below, you're going to be looking for 15,384, 15,325, down into 15,228 before there's a relief rally. Between now and let's say the 15th, you're going to probably be looking for that 15,269, and then some form of a relief rally in middle of September. Now let's look at the RUT, IWM, which are different, but they can be translated easily. We talked about, I remember a few weeks ago, this was, this really happened. I remember a few weeks ago that people on FinTwit got real bearish on IWM. I remember some people bought or held short here and bought puts here. There was absolutely no reason to stay short here. And sure enough, people got burned as we went up over here. This is relevant to everything that we do, right? And this is the same being bullish on this chart. You knew that once we came up here that you should be closing your longs and look for some confirmation that we're getting bearish again. And this is bearish. This is a bearish look right here, right? We can look in the past when we've hit resistance up here. We've come down, right? We come up, right? We come down again. When we come up here, even if we get a relief rally, we still come down. Even if we come up, we still come down, right? So there's nothing bullish about this. Even if we were to get bullish today, let's say we get some relief in here, you could easily take a short here. Heading into middle of September, which is September 15th, I would expect that we come down over this next 7 days, 8 days, these next 2 weeks. I'm feeling pretty bearish about this position, down to 209. This is actually a nice chart. I like this. So I might enter short here. I'm going to look to be entering short somewhere in here and taking this down to 209. And we're going to look for some kind of consolidation area in here. And if you really wanted to get super bearish, that's 205.7 and 1973. I like this chart. This is a nice bearish setup. You could take, even if you had a relief rally in here, you could just take a bear spread, put spread, and it's going to eventually, or it looks like it's going to eventually print. There's probably a fair chance of it printing. We can get on a closer time frame in case any of you here. Yeah, this looks beautiful. I mean, just look at this. This is gorgeous. I like it. So we'll put some, I'm going to push up here. And then we had another push up down here. This is beautiful right here. So the trading range, so you can see this nice gap. Well, there isn't really much gap. There's some gap down in here. So you might want to put this one in here. So My expectations for today would be no lower than 2251.5, possible recovery rally up to 2289. Any kind of recovery rally above, you're going to be grabbing for shorting this down to 211.3.5 or even lower down to 2. I think we're going to head down to 209. Now, you are also looking for becoming bullish on any of these indexes if we start to break above these resistance levels, right? If you see that we push up above and we start to rattle around in here, this is a neutral feeling in here, this is bullish above, and this is bearish below. Keep that in mind as we keep moving forward. Now let's look at Tesla. Gorgeous chart on Tesla. I don't know how many times we've drawn these, but I know it's been a lot. And we've been bullish on Tesla since, I think, May or March. I think we got bullish in March, and then we got real bullish way down here in May. I know in May, we started giving projections of 800 to 1,000. I think we're at 780 today at one point, or close to it. I'm not positive on that, but I think we got close, or 760. And I know Mike Burry got real bearish. That's not doing so well for him right now. We know that, right? We know that there's some resistance above. So there's some major resistance up here. Once we start getting up to this 780, we didn't get to 780 yesterday, but I was thinking about 780. That's what it was, because there are a lot of shorts up here. This is the spring that actually gets you to that 800 and possibly 1,000. You've got this area here, and you've got this whole area in here is kind of the no-go zone, right? This is where your shorts are, and they do not want to see Tesla go any higher. If you are bearish, this is a place for you to make a stand. I am a Tesla bull, but you should be aware that while we're in this zone right here, that this zone is a sell zone. This is a zone where bears will double, triple down, and the reason being is if they have to cover above here, the next move up is somewhere around this 900. And this really does get pretty nasty to 856 all the way up into 900. This is where you start to see the next move to 1,000. It wouldn't surprise me to see some form of rejection in this area here. We've been rejected in the past in this area, this zone, and I would be watching for some form of rejection. How deep does it go? Well, we already know where our established buy zone is down here, right? We can add one more zone in. So I'm a buyer anywhere below 696.14. All this is safe right now. I'm not going to get bearish unless we get below right now 640.77. If you're going to take this bearish, I wouldn't be holding bear positions any deeper than 695.37. And this is going to be an interesting battleground area over here. Let's say SPY and NQ move down and IWM move down seasonally from now until, let's say, call it the 15th, right? As just an arbitrary date. You could see us be rejected in here, but then have a relief rally where the rest of the market drags us up to this 850 or past this 800. Once we're past this 800, if we come above this 8 or this 781, if we are able to rest above this and not lose this foothold, there will be a squeeze up to 856.08. Next, let's look at GME. I know you guys have an ER report coming out. Just for some context, if you follow me or have been a long-time follower of mine, I am an old school Wall Street bettor. I've known about GME since last year. I actually took a position somewhere in December in GME. I played this spike, this original squeeze up, and I played this squeeze as well, but I did stop playing thereafter. I have some friends, finance friends that are actually in finance. All they want to see is GME go away. They don't want to deal with GME anymore. They're going to do whatever they can. There's the argument that the infinity squeeze is still here. I still prescribe somewhat to the infinity squeeze on GME, though there is a lot of work being done to get rid of that squeeze. The work that's being done, this is the answer to a question I had on FinTwit yesterday, is what about the infinity squeeze? Basically is what was asked. And the concern is, like Volkswagen. Porsche was going to take their Volkswagen private, right? And they wound up taking the shares back out of the market so it couldn't be shorted any longer, right? There couldn't be any more squeezing going on by the owners of Volkswagen taking those shares or accumulating those shares. That is happening right now with GME being included into larger indexes. You'll see dilution of stock. You'll see stock become held from people that don't want to see the stock squeeze. You'll also see synthetic shares. You'll see all kinds of nastiness to try to stop the stock from continuing to squeeze over time. I'm not going to compare this right now to Volkswagen, but if you check the Volkswagen stock back when it squoze, I want to say it was 2008. I could be wrong on that date, but I believe it was sometime in 2008. You'll see it starting to follow that same pattern as it comes down. Now let's say you disagree with everything I have to say on GME. That's fine. You can stay in GME for the infinity squeeze. I think all the power to you if you want to do that. My only concern with playing GME is that you have so many other places that you can be making money that I like the idea of new traders finding how to trade the stock markets with GME, but in reality, for the rest of your life, the fact that you don't get a pension or a 401k, you don't have good jobs, there are other ways and places that you should expand your trading into or your investing into that will bring you more money than waiting for each squeeze on GME. Now, this last one that took place in August, everyone was stoked on. I don't blame you for being stoked on it if you were trapped somewhere up in here. My recommendation is that if you want to stay in GME, you can. For the infinity squeeze, they will stop it at some point, even if it does infinity squeeze. You never really win. The man always wins in the end, and that sucks to say. That is the reality of it. We're going to put some, we know that this is some firm demand right down here, and we know we have ER coming up. You should also know that interest in options waxes and wanes depending upon events, right? So you can lose holding puts and calls on an ER event, no matter which direction it goes. Just an interest that's being lost. All you need is one bad event in here for this stock to break through this support. Know that if they announce on an ER report that they're going to dilute shares, that you're going to see the stock fall drastically. You need to understand these things to know when is time to enter GME and when is time to exit GME. You don't want to be a buyer up here, right? You don't ever want to be a buyer up here. You always wanted to be a buyer of GME down here. When I played GME down here, there was no interest. There was some slight retail interest on a small subreddit called Wall Street Bets at a time when I think at that time last year we only had still maybe I don't know if we had 250,000. I think it was somewhere between 150, but sometime even just before that we had only 70,000, right? Maybe 30 to 40,000 active users, not that many people. So to think that it can't come any lower is nonsense. It can, right? To see how much interest is in the options game with GME, it's easy to not really make as much as you thought you'd make. There are other stocks that don't have interest that you can get involved in. So now all that negative out of the way. If you want to be a buyer in GME, the level to be a buyer at is, of course, this demand line down here. So I'm not a buyer of GME today heading into ER until we get down to this 198, 198.65. I would expect some form of a sell-off as we head into the close of today. Down here, if you're really looking for where's that sell-off going to be, it is down here somewhere. It's somewhere down at 177.67. Where are the sellers? The sellers, of course, are right up here right now. They're at 223.91. And you can see, right, we're sitting, right? It's been placed. The market makers have placed it right in the middle here. We'll change this to a green. That's an ugly color. We'll change it to blue or something. So there you go. These are where your buyers are. These are where your sellers are, right? Let's say you have some good news. How far above will you go? Well, you already know that you've got some sellers here. You already know how high we can get, right? So we'll actually change this for safety's sake. We're going to put sellers, trapped sellers up here. We know we have trapped people up here. We're going to put it somewhere right here. This is where people are that are currently trapped from this last push. They're telling themselves, if we could just get back to 266.18, I'll sell out. That doesn't mean we don't hit and reject, but we might reject, come back down to 229 and then shoot back up. But you're looking to exhaust these sellers here, and then you're going to look for the next one to be slightly above at 299.86. So I'm not a buyer until we come down here. If there's any negative news, I'm really not a buyer until probably 118.23, depending on how bad the news is. These two right here would be if there's bad news, you're looking for this right here. All right, I hope this helps all of you apes. I hope that you guys make lots of money. If you think I'm being negative on GME, please don't. I support all of you 100%. I understand where you're coming from. I get it. So I do wish you luck today or at the end of the day in GME. This might be a nice, what might be a nice play in here is to take some form of a straddle or a strangle heading into ER today, or even waiting until after ER or maybe the last 5 minutes. If you're like, I'm just a bull and I want to get bullish, you might want to wait until the last, right up till close to buy some longs. If you're bearish, you might want to wait until a move up today. If you get it to 221 and you want to grab some puts, you're going to wait to grab your puts up here. If you wanted to go a strangle or a straddle, you're going to hope that today we go up to grab some puts here, and then a sell-off down here to grab some calls. So you have some puts with value on them, and you have some calls with some value on them as we head into tomorrow. That's all I've got for you this afternoon. These charts should hold you up for the rest of the week. I'll keep making videos. I need to, when I came back, I haven't unpacked yet. I've got dust on everything. I'm dirty. So I will have more videos out this week. I appreciate all of your patience. I will be trading today live on Twitter. If you could leave me a like and subscribe. I don't charge for anything anywhere. I don't have any private, like chat rooms or anything. I post flow for free. I make videos for free. I try to give trade ideas and trade alerts for free as often as I can. And so the only real support that I get from you guys is from a like and subscribe. Have a great morning. See you out there trading today. I wish you all luck.